Hey everyone, welcome back to Corporate Decoder. Today we are diving into the AMG Funds IV semi-annual report, and trust me, it's a wild ride. You'll soon see if these funds are steering their ship towards treasure or straight into an iceberg. We're looking at a bunch of reports all together here, so to make it as clear as possible, let's quickly dive into the world of AMG Funds IV, examining everything from bond funds to growth funds and how they've performed over the last 6 months. First up, let's talk money, specifically what it costs to run these funds. Take the AMG Beutel Goodman Core Plus Bond Fund. It's Class N shares, which cost $34 for every $10,000 invested. Another of the company's funds, AMG GW&K Small Mid Cap Growth Fund, runs $48 for that same amount. This tells us how much of your potential earnings goes to just keeping the lights on. Next, how diverse is this ship? Core Plus holdings sit at 81, while Small Mid Cap Growth holds 80. Diversity can mean safety. The more holdings, the less reliant the investments are on any single one's performance. Check out how much these funds shelled out for advice. Core Plus Bond Fund paid $39K in advisory fees, while that GW&K Small Mid Cap Growth dished out $78K. This can give you an idea of how much hands-on management is happening, or at least being billed for. Here it is, the Core Plus Bond Fund has a rate of 42%. The GW&K Small Mid Cap Growth turnover sits at just 12%. A high turnover can burn through potential earnings by racking up trading expenses. So in this case, it means the Goodman Bond Fund is churning through its investments a lot faster than the Small Mid Cap Growth Fund. Now let's check out some of these top players and see who's pulling their weight. In the top 10 holdings category, the Core Plus Bond Fund has a lot of money in things like US Treasury notes, FNMA, essentially betting on the stability of America's debt with a little Canadian bond sprinkled in. Those top 10 holdings make up about 43% of the bond fund's entire portfolio, while the GW&K Small Mid Cap Growth is betting big on sterling infrastructure, Grand Canyon education, and the Texas Roadhouse as a strong group of investments. Now, time for some juicy news with these funds. Changes in the air. This past summer, the board approved a plan to liquidate and terminate the Core Plus Bond Fund, with it expected to happen in a few weeks. They've already stopped piling on new 12B1 fees, and AMG Funds LLC is eating the management cost, not charging the fund with it. This is some end of days housekeeping right here. So what does it mean? Well, clearly they aren't too confident. Let's dive into the AMG GW&K Small Mid Cap Growth Fund. This fund likes to invest in companies that show good potential for growth, blending this with careful stock selection. Let's not forget about Focused Absolute Value Fund, which had top holdings in Fairfax Financial Holdings, Berkshire Hathaway, and CRH plc. It's a mix of Canada, USA, and the EU, probably for diversification. Let's not miss mentioning All Cap Value Fund includes the Williams Companies, Oracle, Kinder Morgan as top holdings. Now we shift to Beutel Goodman Core Plus Bond Fund, emphasizing high-quality debt securities that are investment grade, with strong allocations to US Treasury notes and bonds. Alright, let's get into the financial statements. These are a bit dense, but I'll try to make important details clear. How's that saying go? Numbers don't lie, but people can definitely lie using numbers. Assets show that it's betting big on corporate bonds and notes that make up 41.2% of their portfolio as of April. The portfolio breakdown, it's all bonds with about 46% in US government and agency obligations. Seems like it is all about boring bonds and not anything too exciting. Speaking about assets, there's an other assets less liabilities for over 600,000 and a total investment of just over 112 million. Looking at the investment total, that means nearly all the action here is in investments and nothing sitting off to the side. Now shifting to the AMG River Road Focused Absolute Value Fund, it has assets in big names like Fairfax Financial as well as a bunch of others for just about 48 million. Focused Absolute Value puts in a little more work with its financials by showing its joint repurchase agreements with almost 1.5 million. Digging into the short-term investment section, you can see it's mostly in instruments designed to be very liquid, a good sign that fund managers are ready to play moves when the need strikes. Now, time to see if these assets are pulling their weight or just sitting around. Looking at the GWK, it has interest income with 2 million XC some change. So we can see it's a significant driver for investment. Most of the funds are interest income based, as this one, it seems that Focused Absolute Value is making more money. The net change in unrealized appreciation. Depreciation on investments has a heavy loss, which can be seen here, which means it is almost all from the same source. What does each share class look like then? There are 3 of them, and here's how the assets break down. Class I has the most popularity, almost 110 million in assets compared to the other classes having just around 1. What is more interesting is the amount of shares that is the result of the share dilution. We see similar results over and over, so the classes vary a lot. Make sure you pick the share that is right for your needs. It turns out with further inspection that these classes are the same thing all across many reports, but they simply use different terms. For the large cap value select fund, this number is 441,440.41 to see whether this performance varies among the share classes. You need to keep reading. One thing that I thought I would mention, and that applies to many of these funds, is that they will deliver a single copy of prospectuses, proxies, financial reports, and other communication to shareholders to save money. So make sure you opt in if you want to follow their performance closely. Fund N will cost you $44 rather than I, which only costs $36, but make sure you check out the exact numbers since it's only an estimate and can change based on circumstances and may be the price to not receive the same performance. Now, looking at these results more broadly, it seems that these funds have good assets, but some of their decisions are questionable based on their high volume of activity and changes. The investment market is very volatile because of the economic circumstances of the year. Keep in mind that a good portion of these funds invested in the higher quality opportunities and US bonds with different classes as the risk factors. Alright, that's our breakdown of AMG's latest filing. What's your take on these numbers and what they signal for the company's future and this collection of funds' future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives, and make sure to check out the Discord in the description and join our community. Thanks for watching. See you next time.